what to expect today as we're counting down to the big election day verdict. But let me also welcome on board Adrian Mowat, emerging market equity strategist on the show. Adrian, hi, good morning. Big day for us and big day for markets as well. If the exit polls are anything to go by and the reaction that the market had the day after, Adrian, with a fresh all-time high being taken, could one safely say that the best may be behind us?
I think there's a risk that, we've reacted to the polls that came out over the weekend. This market is up 5% over the last 5 days, in sharp contrast to other markets, particularly the US, China. So I think quite a lot of the good news around the election result is already priced in. And the previous segment was just highlighting this expectation that the majority will be even bigger for the NDA than they currently have. And so I do get a little bit concerned when the expectations are quite as optimistic as they are. And we've seen some pretty good short-term gains in the market.
Okay. Adrian, what are the chances that in this kind of a noisy global backdrop, trade war, what will happen to US GDP growth, today's clear election mandate, if it is a clear election mandate with a majority to NDA, could re-rate Indian markets substantially? Because the way an outsider would look at India is that, look, I've got stability, I've got clarity, and I've got a sense on political and economic policies for next 5 years.
Yes, so I think the risk in trying to make that argument of a meaningful re-rating is that valuations are already at a premium to other markets because India's growth story is seen to be the best within emerging markets. It's the fastest growing major economy in the world, and that's a fundamental fact that's been in place for a period of time now. And that's why you get these premium valuations. We have today the likelihood of continuation of the NDA government. We already had them in place for the last election cycle. We've had a whole series of reforms gone through. The question is really for the next 5 years, is this a story of continuity or is it a story of new reforms? And I think it's more a story of continuity. And we'll be back to some of the more cyclical factors in the Indian economy. I don't expect any stimulus from the government. It wouldn't make any sense at all to have a stimulus at this point in the cycle. That typically happens ahead of elections. Where I think you could get a little bit of a cyclical help is that business investment decisions will have a bit more clarity around them in that there is a continuity in policy. So I think there's an argument for a marginal increase in valuations, which we've probably already seen. The other issue we constantly come back to when sort of discussing strategy in India is that there isn't one Indian market. We tend to quote the Nifty or the Sensex, but there's this very large polarization, both in terms of valuation and performance in the market, which can be within sector, let alone across sectors. And I think that probably continues. And when you're looking at a very expensive private sector bank and then trying to argue for a re-rating, that's quite a tough story at this point in time.
If one looks at the positioning of the world, some would say is not that benign. So far, equity markets have not reacted to trade war. Nobody is taking cognizance of the fact that the sugar rush which American economy enjoyed in 2018 and better part of 2019, that will wane away. So what happens in a scenario when global risk, they start haunting us again? We looked at some data, Adrian, in the morning, where if I map what Nifty has done versus what S&P has done in the NDA1 regime, Indian markets have simply mapped global markets. So do you think that is what we should focus on? Once today's dust settles down, we should focus on trade war and other factors rather than the political verdict?
Yes, I think from the perspective of global flows, these issues such as the trade war, US growth, China growth will continue to be important. They'll drive the flows into broader emerging market risk, and India obviously participates in those flows. I would, though, say that markets have reacted to the trade war we go back about nearly 3 weeks now for the sort of Twitter fest that we had from Trump over that weekend, highlighting that the deal was not going well. Since then, we've seen a meaningful correction in Chinese equities. We've also seen a rotation in the US equity market out of technology, out of companies that are impacted by tariffs, and perhaps into financials, which might be deemed as beneficiaries of sort of interest rate sensitive opportunities because you might get a more dovish Fed. So I think it's wrong to say that the market is not looking at the trade impact. It definitely is when you analyze the sector and the stock performance. Now, the question is, does that trade discount continue to build? I think there's a risk that it does because we're unlikely to get a next meaningful data point until we go to the G10 meeting at the end of June, and perhaps that's an opportunity for President Trump and President Xi to come out with a face-saving deal for politics both in China and in the United States.
Of course, as of 6 minutes ago, you had the counting of votes, which has begun officially across the country, 1,100 plus counting centers as well. And so we'll be keenly anticipating what happens. But Adrian, we're taking a poll actually online as well and wanted to get in views from our market strategists and experts as well. The big question seems to be, do you think that the market has already priced in a victory by the NDA? Because we did see quite a ferocious rally as well play out.
I think the answer is yes, it has. It's priced this in. Remember, running into the election, there was an expectation of a continuation of the government, and the downside risk was that they would have a weak coalition. Now we have the good news. If we believe the exit polls, and remember that we've only just started counting the actual polls, we have the chance that we've got a majority government. So a period of political stability, which is good news, but it has been reflected in the performance of the market since Monday onwards.
Adrian, today is, what is the nifty upside? If a stable reformist government does come to power, the upside today, 2%, 5%, or 10%. I know you don't look at things so short term.
I'm going to say 2%.
Awesome. Okay, 2%. That's in fact what Nikunj was discussing earlier, that markets may have already priced this in largely. We got one more question for you, Adrian. What sectors would you be betting on? Corporate banks, industrials, or consumption?
So I think I would look at industrials. I'd look at mid caps. So the logic in terms of what is the delta in terms of the economic outlook for India is that there is greater clarity when corporations are making capital expenditure decisions. So that would be the theme that benefits from this. I wouldn't necessarily go into very expensive private sector banks, which have been the more defensive place to be. So I think this is more a mid-cap story, a stock selection story, where you're playing a modest increase in capex.
Adrian, fantastic to have you on ET Now, and always a pleasure to have you, and thank you for your wonderful thoughts.